fine, but they no fine about you. Oh, na na. They fit you bad, but they no bad about you. Bad about you. They fit you carry, they no carry about you. Carry about you. Hello everyone, welcome back to my channel. Welcome back to another video. Please subscribe, like the video. I have some amazing content coming this summer, so stay tuned for that as well. So, having said that, let's jump into this video. As you saw the title, I am not going back to TurboTax. A little bit about my background, my tax background. I have done 16 or been in the industry, the tax industry, for 20 years now. I have done 16 years with Jackson Hewitt and 4 years with TurboTax. So a total of 20 years. My past 4 tax seasons have been with TurboTax. And then this is my 4th and final season with TurboTax. I will not be returning to TurboTax, okay? All right. So this video is for someone or someone's, that's not even a word. But anyway, this video is for people or someone thinking about maybe working with TurboTax or getting into the tax industry and want to, of course, work with a great brand like TurboTax. It is a great brand. It is a great brand. But I'm going to tell you some pros and cons, okay? TurboTax, first of all, has a net worth of $164 billion. It's one of, or if not the one, or the main one, or the number one online tax company. It's very well known. Everybody online, TurboTax, TurboTax, TurboTax. It's the number one tax company. Or the most well-known, I should say. But let's jump right into the pros and the cons. I'm going to start with the pros. The pros are, some of the pros are, you can make your own schedule, which is amazing. You can make your own schedule. You work from home. They're now even starting to have some TurboTax physical locations as well. But mainly all the jobs are, you work from home. They mail you equipment, they mail your laptop, which is amazing. You get paid training. They do 401k matching. So for every dollar matching, if you put in $1 in your 401k, their 401k, they will put in $1.25. So they do dollar for dollar matching plus a little bit more. They put in $1.25 for every dollar you put in, which is awesome, I really enjoy that. I max out my 401k. I do the 6% totally. The managers, my manager in particular was amazing, super cool. He was amazing. He was awesome. The team that I was on, they were cool too. Not only were they cool, but they really cared about the customers. They really cared about the clients. They really cared about their clients. And I mean, I had a great team. The managers, chef's kiss. You also get PTO. Even though it's a temporary seasonal job, from normally you start in December. I started December the 12th and my last day was April the 15th. So it's a seasonal job and you get PTO, which you accumulate PTO, which is awesome. And you get to keep your monitor. So they send you your laptop and then you get a really nice monitor. I'm going to let you see that. So the monitor is a really nice monitor. It's big. You get to keep your monitor. You have to mail, you have to send back the laptop though. And they send you a shipping label and it's no cost to you. You ship back the laptop, but the monitor is really nice. You get to keep the monitor. I really like that. Okay, so those are some of the pros. Those are some of the pros. I really love the fact that you work from home, which goes into me. You make your own schedule. You can add your hours. If you want to take hours off of your schedule, you're welcome to do that. However, they want you to maintain at least 20 hours per week. February and March, unlimited. Well, I'm not going to say unlimited overtime. They cap it out mainly, they cap it out about, during peak, about 70 hours a week. So you can make some really good money. So let's move on to the cons. I'm going to start with the cons. I'm going to start with this con. I'm going to say that. The pay. Depending upon what state you live in, determines your starting hourly pay rate. Now, they want you to have at least minimum 3 years of tax knowledge. Depending upon the state, as I stated, they start out anywhere from $21 to about $25 an hour. You might say, hey, that's pretty good. Hey, that's pretty good. If you're credentialed, they will start you out at about $30 to $35 an hour, somewhere in there if you're credentialed. And when I say credentialed, I mean enrolled agent or CPA. That's not enough. That's not enough. With the call volume, with the type of calls you will be getting, that's not enough. You will also have to, I was in full service. I was a full service tax expert. You will also have to prepare clients' tax returns from start to finish. They upload their documents and you will have to complete that tax return for that client from start to finish. Unlimited forms, unlimited 1099s, unlimited W-2s, unlimited K-1s, unlimited K-3s. You will have to prepare that tax return. Not enough. It's not enough. Metrics. You will have metrics once you clock in. Once you clock in, you will have a metric for everything. You have a metric for everything. I'm just going to say they will metric you to death. Okay? You will have metrics for everything. I'm just not going to even go there. But you're going to have metrics for everything. And of course, they are really, really big on surveys. And I mean, I get it. You're working from home, metrics, I get it. Surveys, I get it. I get that. But you could have an amazing day or amazing week, the best metrics, and you get that one client who is upset because, not at you, because they're not getting a refund and they're going to owe. And so it'll drop your metrics. I have nothing to do with you owing. Nothing to do with you owing. It's not my fault. But they will be upset and they'll just, hey, they'll give you a bad survey and your metrics will plummet, right? How does that affect your bonus? That affects your bonus because your bonus, depending upon what level you come on board with, will be either $2,000 or $2,500. So if your metrics, for whatever reason, on where it needs to be, that will take away from your bonus. And it's something you don't have control over. It really is something you don't have control over. And they should really consider throwing out at least the lowest survey and then the highest survey or something like that to kind of balance things out. Maybe I'm just throwing that out there. And then another thing, they throw your bonus constantly in your face like a carrot. Like, Okay, you got to do this, your metrics, your bonus, your metrics, your bonus throughout the whole season. So you want, of course, everyone wants the maximum bonus. Everyone wants the maximum bonus. So for me, or for anybody, it stresses you out, causes you a little bit of anxiety. I just think their metric system sucks. It sucks. But that's some of the cons. Another big con are clients. For the most part, your clients are going to be understanding. They're going to be, especially during the beginning of the tax season, because during the beginning of the tax season is when you have those clients who are getting big refunds. Oh, they're getting big money. They're getting EIC, they're getting child tax credits, they're getting American Opportunity Educational credits, they're getting all those perks in their tax return, in their tax refund, driving up their tax refund. So, they're cool, no problem. Hey, we're partying. Hey, it's a good time, right? But towards the end of March, going into April, you will get those clients that they're going to owe, because not everyone is going to get a refund. Even though everyone wants a refund, not everyone is going to get a refund. In April especially, you're going to get those clients who owe $5,000, $6,000, $10,000, $20,000. I had a client who owed $35,000. I had a client who owed $35,000, called April the 15th, 10 p.m. at night, and it wanted me to help him find deductions and write-offs. If you wait until April the 15th to try and get your tax situation in order, and especially if you have a business and you're looking for business expenses write-offs, April 15th at 10 p.m., you deserve to owe. I'm just going to be blunt and just keep it 100. You deserve to owe. Because if you're thinking about your tax return, if you're a business owner and you're thinking about your tax return and you haven't thought about it until April the 15th or April the 13th or April the 12th, or as a matter of fact, in April, you deserve to owe. Because you should be thinking about your tax return or your tax refund or how much you're going to owe and your business expenses. You should be thinking about that a year prior. You should have been thinking about that January of 2024, right? Because let me tell you, I'm going to say over 70% of the write-offs that tax preparers do on their own with their business, you guys don't get it right. The mileage, you guys skew the mileage. You put in the mileage so totally incorrectly. You guys don't keep a logbook. So you're just throwing out numbers, guessing. And that's another thing. You definitely want to keep a logbook. If you're a truck driver, and the truck drivers are good about that. The long distance 18-wheeler truck drivers, some of them are really good about keeping their mileage. Uber drivers, Lyft drivers are not. And I've seen some of you guys' tax returns, horrendous. I'm just gonna say it's just not cool. If you own or if you have a business and you're a sole proprietor, LLC, self-employed, and if you have a home office, you're doing your home office deductions. Most of them are wrong. I've seen some of you guys' deductions. It's like, I don't know. If it's your first year, and if you have a business and it's your first year, don't try and do your tax return yourself. Consult, pay the extra money and consult with the CPA, especially if especially if your business is a high revenue company. You definitely want to consult with the CPA or a professional, a tax professional that's been in the game for years and know what they're doing. you guys, I know you want to do it yourself. I had a lot of clients who want to do it themselves, but want you to show them everything on the phone or in a chat. That's not, no, no. Tax laws are too complicated. Tax codes are too complicated. You need a professional. And I know some of you guys don't, if you have a K1, you need to be talking to a CPA. A K1 partnership, K3, you need to be talking to especially if it's a lot of money involved, you need to be talking to a CPA. It just is what it is. I know you're trying to save money, and a lot of times you guys who have these businesses, you're leaving money on the table. You're leaving money on the table. Get educated. Talk to a CPA, tax professional. I would say every tax season. Because I've been in the industry 20 years. It's not one tax season that was the same as the previous tax season. Every 20 years that I've been in the tax industry, every tax season was different. Point blank, period, full stop. Every tax season is different. So you need to be consulting with a professional. Don't try to do it yourself. I had a client, and don't listen to your friends or family. Some of you guys listen to your friends or family. I had one gentleman who made $170,000. His coworker said, file exempt. I file exempt. File exempt. He made $170,000 on his W-4. He put exempt. In box 2 of his W-2, 0 withholdings. Off $170,000, his tax bill was over $8,000. And he wanted a payment plan. The IRS will charge you or assess quarterly interest. I think around 3%. So that $8,000 that he owed, or over $8,000 that he owed, is going to be $10,000, $11,000 by the time he's finished, because he listened to his coworker who told him to file exempt. Right? Don't listen to your family or friends. If your family and friends are not in the tax industry and haven't been doing tax returns and are not credentialed, don't listen to them, because everyone's tax situation is different and not like your tax situation. Okay? So, don't listen to your family and friends. Make sure your W-4 is correct and accurate for your tax situation. Make sure that W-4 is correct. If you're not sure, talk to a tax professional. Once again, I've had so many people whose W-4 was filled out incorrectly from their employer. It was just filled out incorrectly. And that's every tax season. So, as I stated, I will not be going back to TurboTax. I've given you the pros and the cons. Turbo is the #1 online tax company. I believe their net worth is $164 billion. We're underpaid, for one. The metrics, for 2. I think the bonuses should be better structured. Absolutely. But hey, if that's something you think you want to try out, try. But for me, it's over. It's over. I hope you enjoyed this video. I get a lot of my knowledge also from this amazing book that I read, How to Lower Your Taxes. It's written by a CPA who is a tax attorney, and she is a former IRS attorney, actually. And I believe she used to work at the IRS. Don't quote me. But she's amazing. So I read this book. This book is amazing. Educate yourself. If you're going to do your tax returns and you have a business, especially if you have a business, educate yourself. Educate yourself. And as a matter of fact, don't even do it yourself because no. Okay. Well, thank you for watching this video. I hope you enjoyed my video. I'll see you on the next one. Thank you. Bye.
They fit to find, but they don't find about you. Oh, nah, nah. They fit to buy, but they don't